every chart scanned overnight, United Health Group Incorporated ranked highest. Bias, long. Entry, target, and stop are at the end. Let's earn them with the evidence first. The plan for the next few minutes: retail signals, institutional footprints, then entry, target, and stop. Evidence stacks in that order. Let's go. Onto the chart. 60 daily bars and one story. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $450. Red is our SL at $413. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double bottom, rising wedge, bull flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. 1 second. If charts like this are your thing, subscribe now so tomorrow's scan lands automatically. Pattern number 1. This is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs. Read was 271.45 as measured move target 300.29. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 26.7%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2. This is the rising wedge. It's a bearish formation with 2 out of 3 strength. Rising but narrowing channel. Bearish reversal signal. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 5.0%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3, this is the bull flag. It's a bullish formation with 2 out of 3 strength. Flagpole plump 5.0%, then tight consolidation, bullish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is mulplo 5.0%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Let's talk key levels. Every trade is really a conversation between support and resistance. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of plus 0.48, technical plus 0.33. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 46, and that tells us we're in a strong trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Here's the layer most channels skip. Patterns and indicators are the surface. Underneath is where institutions leave footprints. Let's read them. ICT and smart money concepts. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bearish zone between $399.65 and $414.16. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $377.09 and $387.61. Price tends to revisit these imbalances. Most importantly, we just had a Chach bullish move at $398.59, a key structural signal that smart money traders watch closely. Next up, Volume profile. It shows where the heaviest trading happened, and those prices act like magnets. The point of control, the most traded price, is at 278.65. The value area runs from 269.64 on the low side to 354.55 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price $424.62 is above value area high, 354.55. Trading above VAH indicates bullish strength. POC at 278.65 is key magnet support. Order flow next. No level 2 here, so we read pressure from closes and volume, a solid proxy. Over the recent window, buying pressure accounts for 40% of volume versus 60% selling. The overall flow signal is neutral. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 66, signal neutral. Williams percent R is at 28, neutral. Chaikin Money Flow reads bullish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Fundamentally, this one's pretty in line with its sector. No screaming value or screaming overvaluation. That's actually fine. We're trading the chart here, not the company. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR percent. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. 1 minute to the trade. If you're finding value, the subscribe button is right there. Daily scans, posted results. 1 slide on risk. Skip it and no signal can save you. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and 1 bad trade can take you out. Everything stacked. Now, the levels. Bias is long. We'd look to enter near $429. Take profit sits at $450. Stop loss at $413. That puts us at 1.24 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 1.24. Horizon is roughly 5 and that's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. Comment the ticker you want scanned next. I read everyone. And subscribe for tomorrow's breakdown. So zoom out for a second. What we just walked through on UNH, that's a long bias setup projecting roughly 4.7% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. If this stacked up for you, say so in the comments. Trade safe. See you tomorrow. Tomorrow morning, the AI scans the entire market again, and I drop a fresh breakdown on whichever ticker ranks highest. Could be a stock, could be crypto. Join the channel and turn on the bell. That way tomorrow's video actually reaches you. See you in the morning.